All right. Hi, everyone.
Hello.
My name is Tuomo Tähtinen, and
Yeah, you can give it to me.
I'll be holding this fireside chat with these two fine gentlemen here. So with me, I have here Ken Umezaki, who's an angel investor and the founder of a company called Daruma, which is a company that invests in digital music transformation and also invests directly in artists. Ken's also involved in several startups and music foundations and organizations, and also has a long history in investment banking. We also have Thierry Baujard, pardon my French, who's the founder of investment network called Media Deals, and also the CEO of Peaceful Fish, which is a consultancy that specializes in the financing of the entertainment industry. So, maybe Ken, you could tell a bit more about Daruma and what you do as a company.
Sure. So I kind of view myself as an independent entrepreneur and explorer of the new music ecosystem, and specifically trying to make the world of digital friendlier for the creator community. So I spend a lot of time on the artist side of the fence. My day job is investing in music startups. I've made 6 investments. I've probably looked at about 500 companies as an independent investor. And I also do direct investing in artists, which is what I'm going to talk about today. I have a background in finance, as you mentioned. I've spent 25 years as a trader and manager of trading desks on Wall Street, and decided that this whole digital transformation is just too exciting to ignore. So I've made the switch, and I've been doing this for about 7 years.
That's quite exciting. And what was the driving force that brought you to especially to music from investment banking?
I've been a hobbyist musician my entire life, so I play saxophone, I play bass in a rock band still. Was a radio disc jockey at one point in my life. So music has always been a passion of mine. And what I see, and what got me interested in the music business as an investor, if you will, is there is a tremendous migration that everyone's talked about today happening across all the different participants. And to get an inside seat and kind of watch that transformation from within is something that I felt is a very compelling sort of second career, for lack of a better term.
Thierry, maybe you could tell also a bit about Media Deals and also your relationship with music in that context.
Okay, thank you, and good afternoon. So my company is based in Berlin, in Germany, even though I'm French, as you can hear. And we are specialized in investing in creative industries. So we've been looking at audiovisual sector and cinema, video game, music, and the publishing sector as well. Myself, I'm coming from more the film finance side. So that's a subject I've been doing for about 15 years in different parts of the world. And then for the last 4 or 5 years, I've been expanding a little bit my expertise in finance in one sector to the other sectors, because of course with the digital revolution, all the different sectors started to follow the same kind of patterns and the same kind of interest for investors. And in terms of music, I've been investing in company in music tech, but also in music publishing, so in both sides. I've been interested in particular about how music can go into other sectors or can be a link to other sectors. So for example, we've been working in investing in film music, so doing the link between music and the film industry, which leads to the video game as well, music for video game. And then the other side, the company which is Musimap, that you can find in the booth in the middle of Slush Music, is a recommendation system based on moods and emotion, and that could also work as well for other sectors, not just for the music. It could also be a recommendation model for video and games and books and everything. So that's what I've been interested to bring on board other investors as well.
Traditionally, record labels and music publishers have been sort of the venture capitalists of the music industry. But recently we've seen a change in that ecosystem, obviously through systems like crowdfunding and funds investing in catalogs. And now we can see even streaming services sort of moving into that space, at least enabling artists to work independently. So I'm curious about why are investors now looking at also getting into this space? And who are these people that look into investing directly in music, whether it's the creators or the artists?
Yep. So, you know, the big change, or the thing that I always think about is the skew in the revenue base for music assets broadly, and I'll be sort of overly general for purposes of this conversation. But, you know, in essence, you know, very often you get quoted this factoid where 1% of the artists make 75% of all the revenues associated with the music business, and the rest of the money goes to the 99%, the rest of the 99%. Historically, I think the labels, the publishers, even, say, concert promoters, have had either both more capital and more ways to actually monetize the risk capital that they're using. What I see happening is that the sort of those traditional channels have moved even further to the right and probably are investing less capital as a whole than in the past. And so that creates, I think, a very, very important void for the other 99% of the artists, if you will, many who are established and independent, many who are new to the business market, where you needed to think through, or we needed to come up with collectively a way to put additional risk capital to work. So hence crowdfunding, hence a number of funds which have kind of come up recently, at least in the US. There's a fund called the Alignment Artist Capital Fund. There's another one called the Unison Fund that was just launched, which are meant to kind of focus on, I think, not the 1%ers, but the rest of the marketplace. Certainly, my experience in direct investing in artists is focused on that part of the curve, if you will. I call it the 5 to 20% part of the artist spectrum, if you will, where I feel like alternative capital can be additive and also perhaps more partnership-oriented as opposed to explicitly tied to assets, whether it's rights on the master side or rights on the publishing side. You kind of take more of a venture capital, or if you will, partnership capital approach and take a more holistic investing view. And I think there's a space for that in the market today. So you're practically
saying that the polarization, in addition to creating challenges to creators and artists, it has also created an opportunity for external investors to come in and find kind of chances to fill that void in a way.
Yep.
So as an investor, what do you practically look at when you consider investing in a specific individual artist? What are the factors that you have to evaluate?
Sure. I think it's a very, very early experiment stage still. So I wouldn't say there's actually a fixed business model or whatever. And there are relatively few examples of people working on developing and sort of emerging talent, as far as I know anyways. So in that context, the experiments that my company have been doing, if you will, in terms of investing, have focused on a bunch of basic criteria, a certain minimum revenue, gross revenue threshold across all the activities of the artist. They need to be managed by a professional manager, ideally for a relatively long period of time with the manager already, because you're making an equity investment in the sort of the company, if you will. In addition to that, it's great if they don't have a lot of mortgaged assets or previous deals that you need to kind of, where in essence the revenue streams have already been spoken for by third parties. So you'd start with that, and then obviously you gotta like the music. I think that's important. There's a sort of
What role does taste play? Do you really, or do you have to erase your own taste in order to make a proper technical investment? Or you have evaluation?
No, I think it's an important component. I would say the two elements that I think about is you gotta like the music, and ideally in the current world of digital music, where maybe there's more of a skew towards collecting lots of revenue streams as opposed to earning something from just one spot. ideally, the artist would have sort of a utility-like capability to songwrite, to perform well, willingness to actually go on the road and tour. All those elements, to me, are important to kind of figure out. And then the last piece, which is sort of financy, but not all artists are investable, even in that category, in the sense that they may not have legal entities set up to actually operate properly. They may not have a business mindset, which I think is actually important. So there is a investability, if you will, of the artist that you need to think through as well.
Thierry, your focus is a tiny bit different. Media Deals focuses on investing in film music. What are the factors that you need to consider when you're evaluating whether to make this specific investment or not?
Yes, so the film music is one particular case that we have, which came from a market need, I would say. We came from the film production need. Film producers need music, need original, high-quality music, but at the same time, they don't really have the budget, most of the time, in their film budget to have enough money to get the relevant composer. So that's where we're coming. So it's responding to a market need, I would say. The second thing is that we attracted more like business angel investors, so not really funds, but people who were not so experienced with the business, but were attracted to the cinema world, to the fact that music, they all listen to music and they are interested in that. And it was a way for them to access film at a lower price, I would say, because obviously the music budget in the film is much lower than the film budget itself. And then the third approach that we had, which I think was very convincing for investors, is a portfolio approach, which is basically what every financier do when they do investment. They never invest in one project and just hope and pray that it will work, but they invest in a certain number of startups or in a certain number of shares, of stocks, so that they say, okay, one of them will make some money. So the way we've done that is that we have sold to investors portfolio of projects to a certain amount that was attractive for them. So it was an amount, for example, between 200 and 300,000 euro. And they invested in a few projects with different risk profiles. So some very risky, so small indie films, etc., that could work, and some much better with more distribution, etc., but with limited potential return. So it's a mix of that, and this kind of approach, on one side artistic, because we're talking about music and film, but on the other side with a stable business model, with a portfolio approach, has been very attractive to people, basically.
Right. Can you promise to present a case, actually, about the specifics of direct investment? So I'd be happy to hear about that now.
All right. Shall we do a slide real fast? Sorry. I'm no good without visual cues. So this is kind of what we talked about already in terms of a backdrop, right? These alternative sources of capital existing. And we can come back to this slide. I do have one particular case study, which is an actual investment deal that I've done together with other investors. So I thought I'd sort of walk you through that to give you a more tangible feel for it. The artist is named Stolar. The artist has been around for about 8 years. And I would put him under that utility category of artist. He is a songwriter first and foremost. He also has a strong vocal performing as well as guitar playing ability. And he also has historically actively toured, has not been on the road for a while. He does all his business. We actually had to consolidate it, but through a very simple legal structure called an LLC in the US called Simple as That. And basically has about 20 radio-ready songs ready to go. He has over 200 songs actually in his back catalog that have gone unreleased and is not in a publishing deal. And he's actually pretty decent on the road. I'm talking my own book. But so imagine this as being the structure. Here's what we did. Is managed by a company called One Duda Management out of New York. A management deal, as many of you probably know, is pretty, typically a percentage of everything. that comes through, whether it's sponsorship money or placement money or obviously masters or publishing-related revenues. And it's generally a percentage of net. I joined early as a co-investor and a co-manager of the artist. And then what we did is we actually raised outside capital from about 6 other investors. Very similar structure where they earn a percentage of the net revenues of everything that happens in the constellation of Stolar's business. And the way that works is up to their principal being returned, it's a certain percentage. Up to double, it's actually half of that percentage, and so on. So as the artist grows, the actual investors take declines and ends up with a net return, obviously. And the deal was structured in such a way that we felt pretty comfortable that a commensurate return on a very, very risky investment, which is an isolated artist, right, stock picker in the world, in the world of art, would work out. Typically, we look for a 20% base case return with upside from there. Jay Stolar, who is the principal artist behind that, obviously collects the rest of the money, and it's structured with certain expense-related constraints so that Jay can't go off and spend all the money that the investor puts into the company to go party at in Ibiza or whatever.
So we're basically talking about a royalty-based, a revenue-based model here instead of investing in equity. Can you explain the foundation behind that ideology?
Yeah, I think the rationale for this particular structure working for all of the parties is that it's actually relatively easy to understand if you're sitting on the artist side of the fence. They understand what a manager deal is. They understand sort of how the manager gets evaluated and therefore collects money. And it also takes a more holistic approach than the other, if you will, types of deals that you can historically do. A label deal would basically mortgage your recording assets or your masters. A publishing deal, you'd be obligated to produce a certain number of songs over a period of time and so on. This takes that away, and so it does feel more equity-like in the sense that you're riding alongside the artist's overall, if you will, growth and success over time.
And this ties nicely into growth expectations. And obviously, with an artist, you're not really aiming at an exit, hopefully. So, what are realistic growth expectations for you as an investor? What sort of growth do you need to see in order to be interested in getting along?
Yeah, it's hard to be overly general, but again, just like an A&R effort at a label, I think there's a lot of culling and sort of hopefully reducing, if you will, the type of artist that you would invest in at front, so you kind of de-risk yourself there. And then back to some of the criteria that I'm currently working with in our company, which is minimum revenues. These are not newbie artists who don't have anything. Now, many new artists are going to break and go crazy. At this point in time, I don't feel comfortable personally taking those kinds of bets. But I think there are artists like maybe Stolar who actually have already a revenue stream and obviously a professional management sort of representation. And actually I didn't show the slide, but it has a full stack services team around it, from marketing to booking agency and so on. So, those types of people, I think you can actually evaluate somewhat quantitatively. And then it's actually making sure that the money gets spent so that the growth and the strategy associated with the artist becomes real.
Right.
So we spend a lot of time up front before we actually do deals talking about, hey, if you had X amount of money, what would you use it for?
So you're sort of almost like a manager here, or a partner of the management. Thierry, what kind of returns do you expect?
Well, of course, it depends. First thing that is important is to explain the difference, because you talked about this revenue share. We talk, in the case of Just Temptation, that's the company for film music, we talk about project financing, which is obviously, as you say, different from an equity investment in a company where people look for an exit. Okay, most of the traditional investors or business angels, they want to put equity and get an exit in 5, 6, 10 years, anything. In these cases, and that's maybe one of the models for direct investment in music, is that we're talking about project financing. So it's more like royalties they would get back at certain point. So either as a share or as a royalty. In our case, for example, we have a mix. It's quite a complex system, but we have a publishing company where we had investors putting a little bit of equity in it, and then we had a company doing the production supervision and financing the project, where they brought co-financing in projects. Okay, and what we give them, we give to our investors, we give royalties for a certain number of years, a share of a royalty for a certain number of years. But on the long term, our strategy, the strategy of the company, is to keep rights. Okay, so in the publishing company, we own all the rights, so it's not shared with the investors, for example. And the investors, it's a lot about education. We do quite a lot of that, explaining to investors why in that sector it's better to have a project finance instead of investing in equity. There's no exit, for example, or it's much more difficult to get an exit. Okay, the exit could be someone buy the catalog, but not the company itself. Okay, so it's a lot about education to explain that. And then, of course, in terms of return, yes, it depends. It's clear. I mean, for me, it's clear that the people who come to such project, they don't expect the same return as if they were investing in a biotech, new technology where they hope to get 100 times that. It's not going to be like that, but we tell them right from the beginning of that. And the bonus.
As with all interesting topics, the time seems to run out here as well.
I see.
So we need to start wrapping up. We will continue the discussion at 5 o'clock today in a workshop. So anyone who's interested in digging deeper into direct investment in music, please join. You also have the opportunity to engage, ask questions, and comment from your own perspective. So that's going to be at 5 p.m. Thank you so much, gentlemen.
Thank you.
I think there's one conclusion, and that is that there's definitely opportunity in investing in music and artists, and we should all explore that more. Thanks very much.
All right, thanks everybody.
Okay.
Let's do it.
Thank you to our panel. Once again, it is very nice to hear some applause when you walk down our stairs. So our panel, once again, give a warm round of applause, please.